Perfect. Okay, I think we might just kick off. So thanks everyone for joining the event. I'm not sure how many of you may have been here for our previous event in December, but it was a huge success. So we thought we'd just kick it off again and keep the ball rolling. So just to give you a brief kind of overview of the structure for today. So we're going to start off with our guest speaker, Tim from Moscar Capital. So welcome, Tim. So Tim is just going to give us a brief overview of kind of Moscar and how they work and a bit of a background into their due diligence process and also kind of how they add value. So yeah, that should take about 10 minutes and then that will bring us into our pitches. So we have 6 companies pitching today and it's a nice mixture of sectors, so we'll keep it interesting. And everyone has 5 minutes to pitch, so I will have the buzzer ready to go if you go too far over that. And then during the event, I'll circulate a form which is for investors. So if anyone's interested in speaking to any of the founders or all of them, you can just fill in that form and myself and Tom and Bobby will make the introductions after the call when we follow up. And then so in interest of time, we're not going to do any Q&A, but again, you'll have that form which will give you the opportunity to speak to all of those founders. And if you have any questions at all, you can always just ask one of us too. So yeah, I think, Tim, if you want to share your slides, I know you have a couple of slides, it'd be great to kind of get the ball rolling.
So I think that should be there, Kerry.
Yeah, good to go.
Well, thanks for the intro, Kerry. I won't take too much of everyone's time. These are just a few, this isn't a sales pitch for Moscar at all, it's just a few sort of musings on things that we do as a venture capitalist, and useful hopefully to any of the hopefully to the investors here as well. So I've made it sort of more investor bit focused than for the portfolio companies. Just by way of background, I'll give you 2 seconds on Moscar. So we're a smallish 15 million venture capital firm. There's only 2 of us as GPs, myself and my partner Leo, and we've got a 3-person IC. We've got some grey hair on the IC. We're very sector agnostic. We aren't an expert in anything particularly. We're jack of all trades. It's one of the few jobs in the world where you can excel by being a master of none. We invest just before a Series A raise, so we try to pick the point just before they're going to do a larger 3, 4, 5 million Series A raise. And our criteria are really simple. We look for companies that have revenue because we validate the company's product by speaking to their clients rather than being an expert in the actual product. We look for companies that are bootstrapped because we like to add value. And if there's a fund already there doing everything, we don't add any value. And that's broadly speaking, we write tickets between sort of 500,000 and 1 million. Currently got 10 portfolio companies in Moscar. And so what Kerry and I thought we should do is just do 2 sort of little bits to start with. So yeah,
so I think kind of, as you mentioned, Tim, like the fact that you guys are a little bit more niche in the stage you invest in, and you're all obviously a slightly more boutique VC, I suppose there's probably pros and cons to the fact that you guys have less people looking over your shoulder during due diligence. So it'd be interesting to hear how your due diligence process differs to kind of larger VCs.
Yeah, so hopefully this will be interesting for both sides of the equation because, as Kerry said, we are much smaller. We do due diligence really as sort of a confirmatory due diligence, but we also have invested alongside some of the larger VCTs, the Merciers, the Foresights, etc. And I've seen, that's the other end of the spectrum, I've seen their level of due diligence. Now, their level of due diligence, I'm not going to just sit here and slate, but what I wanted to really talk about is what due diligence do you actually do that actually changes your investment decision? Because that's probably the most important type of due diligence. And I think there's a few things here that are common across the whole spectrum and whole range of detail. The first thing that I think everyone needs to do is match the numbers you've been given. So everybody gets given nice, beautiful presentations, nice models. What you need to really do is match what you can with actual data. Now, if you're setting it up from a portfolio company point of view, it's very important that you don't have much discrepancy between what you're saying you've done and what the actual accounts and what the actual numbers have. Now, there's always going to be some exuberance in entrepreneurs. They're always overselling. There's no way around that. But you have to match it as much as you can. And that mismatch between the oversell and the actual numbers is a personal preference as to how much you're able to cope with. This clearly affects your business, your actual investment decision. If it's wildly out, you're not going to invest. So it's just a sort of, that's a sort of a warning to the portfolio companies never to produce stuff, because this stuff, there's nothing worse. And I've done it. I was looking at a company a couple of years ago where there was just a huge mismatch between what they had in their pitch and what the actual numbers said. And then what do you do in that situation? You can't do sunk cost of time. You just got to move out. Second sort of due diligence you do as well is reputational due diligence. I think affects your investment decision. I don't particularly agree personally with trawling back through someone's Twitter, Instagram, etc. But it's the world we live in. On the next round, people are going to do that as well. So if you trawl back and you find that he's part of a neo-Nazi party, he's out. Just that affects your investment decision. And it can be, most importantly, it's a blocker to the next level of investment. So those two examples are ones that genuinely affect your decision. But I find it quite frustrating listening to questions that I think have no bearing on your investment decision. So, for example, if you're going to spend ages talking about whether they are going to do 30 or 40% of this raise spent on marketing, how's that going to affect your investment decision? I mean, these are very qualitative judgment calls, and I don't particularly think that they have very much merit. And I will say, gosh, the time's running out already. I was only going to spend 2 minutes on this. The last one I wanted to say was just how much weight you put on a model. From the portfolios company, my little trick, giving away the secret sauce here, is to always go and find a previous model from a previous round that someone has produced. You should always go back, find that previous model. It is never, unless, black swan, it's never where they are now, but it's good to know where they thought they might get to. So just be careful with these models. I don't put much weight on forward-looking models, but I do put a lot of weight on if I find an old model that matches with today's date.
Perfect. Yeah, I think it's something maybe investors could speak a little bit longer about, or a lot longer. Sorry for pinning you in the middle of the conversation there. But yeah, so I think kind of that leads nicely into my next question, because a lot of our founders would spend hours and hours every week kind of trying to find the right investor and impress that right investor. But then when it gets to the stage of due diligence and then actually getting an investor on board, I suppose that's where there's a lot of questions. And I think it's safe to say there's a lot of capital in the market at the moment. And the question I had for you was kind of, how do you guys differentiate yourself from the big dogs when a founder has been offered 3 or 4 different term sheets? And I think it would be an interesting one for both founders and investors to hear how you guys feel you can best add value. Is Tim gone? Just make sure he's invited back in. Seconds. Okay, I think we may have to move on from this. But having spoken to Tim, I think kind of a big value add from their perspective, being that little bit smaller, is kind of the more strategic investor angle that they can add compared to those big VCs, because they can have really close relationships with you guys, and then they can also give you advice when you're moving into your Series A round on kind of who might be the better investor to go to and who's the most relevant, because they have connections with all of these large VCs and they know how good a bad or job they may have done with previous investments. So I'm not sure if Tim is going to be coming back on. I'm not sure what happened there, but we will move on swiftly. So thanks, Tim. You're not here. So first up, we have Lex from Electric Rider.
Yes, here. Hey.
I'll just let you share your screen and
Fantastic.
Kick off the timer whenever we have it up.
All right, great. Is that all good?
Yeah, you good to go?
Okay. Yep, good to go. Okay. Hey, everyone. So my name is Lex, and I'm the founder of Electric Rider. So we're the electric micromobility platform of the future. So we're currently the fastest UK growing retailer for micromobility. This covers everything from e-scooters, e-bikes to e-mopeds. And we offer different sort of payment methods, leasing, and subscriptions. And we also have a servicing platform built in as well. So we're an evolution in e-mobility. So what does that mean? So we're currently an online store and also an advice platform, offering a mix of niche expertise and the greatest brands. So we empower businesses and individuals with the perfect e-mobility choice. We've achieved £1 million in revenue over the past 18 months, and that's despite COVID-19 with an 80% drop in stock. So we know that global emissions are a problem, and society is transitioning away from combustion engines to electric vehicles. And so the most important part of this is that, you know, the personal EV market, as we all know, after COP26, there's a huge agenda around this. It's growing very fast. It's actually growing at double the rate of electric cars in terms of units sold or the adoption rate. And following COP26, we also know that legislation is demanding a huge amount of change, and sustainable transport is needed, especially domestically, where we are slightly behind the curve. And so there's a compounded annual growth rate of around 30% in the UK alone, at least until 2030. So the opportunity is huge. So the only really barrier at the moment is access to capital to leverage this opportunity and to scale. And so what do we have? What have we built? So we've built our platform, which is electricrider.co.uk. We're a customer first business, and we offer the best in class pre to post sale care. So we have a few features. We have a help me choose tool that offers bespoke recommendations to customers, flexible financing options, and sector leading aftercare with our rapidly growing network of mobile mechanics. So we offer a B2C offering at the moment, but our biggest opportunity is actually that of serving the B2B space with corporate fleets, as we've had a huge amount of interest and inquiries from them. So some of you may have heard of Van Moof. So they're recently valued at $1 billion. They've had around 12 years of traction. I like to make the comparison that if they're the equivalent to Apple, they only sell 2 products. We actually have 55 brands and 400 products. We're kind of like Amazon, I guess. And, you know, we offer the greatest choice, the best customer service, and impartial guidance for customers to serve them at scale. So imagine after 12 years what our valuation could be if we keep scaling at this rate. So we've collected lots of customer data. We know what customers want. And with our team, which I'll talk about in a moment, we have access to factories that can produce our own white label models at around 60% margin rather than 30% margin, alongside deploying additional perks to our riders, both B2C and B2B, which can offer inclusive insurance, servicing, and accessories. It's sort of an easy to manage dashboard for them. So what have we done? So we've crossed 1 million in revenue. It would have been about 1.5 million, but we had COVID. And I think we've been through the worst. So with your investment, we're looking to scale the platform even faster. And we have a fantastic customer base. And a lot of our business is actually from word of mouth, which is fantastic. I think the most important thing here to note is our profitability. We've got around a 15x return on ad spend. So anyone in the marketing space knows how it's great numbers, hugely profitable. And so we've recently signed deals with Ducati, Lamborghini, Alfa Romeo, and Jeep, and they're all entering this micromobility space. It's a testament, I guess, to the trust we built in the industry in such a short amount of time. And there's many more well-known brands that will be joining us soon. And so with part of the investment, it would allow us to open new trade accounts, with other well-known brands such as Rally, Cube, etc. They have a minimum order quantity that we would need to invest in them. And so our phasing, there's really a few phases here. The main one is to roll out our platform to B2Bs, and it allows us basically effectively to serve them on a larger scale. And alongside that, expanding our servicing network simultaneously. So just to get onto the team, I know I've got about a minute left. So myself, obviously, I started the business with £3,000. We just scaled by reinvesting. We have an incredible team. Mark has just joined us, a great career. He's IPO'd 4 businesses. He's really putting together a plan to help us IPO, hopefully within the next 2 to 3 years, and scale up towards Series A. Connor, who joins us as Chief Commercial Officer. And by the way, we're still waiting for their photos because the new joiners have just joined last week. So Connor joins us as Chief Commercial Officer. He built a servicing business that went from $1 million to $1 billion in revenues, and he'll head up the deployment of our corporate contracts, deal flow, and our servicing side. We've got Matt, again, we're waiting for his photo, CFO, a strong 20-year corporate career, raising money and helping businesses exit. And then we have Gila, Head of Sales, 30-year career, and Greg with a 25-year career in the cycling world, who used to work at Rally, who has industry-leading connections with factories. And so what are we looking for? We're looking for 500,000 for 15% equity. We have EIS available. We have raised £150,000 to date, and our long stop date to close this is the 31st of March, 2022. So not long left. And so, yeah, I'd just like to say, thanks for listening. We've had quite a few funders we're in talks with at the moment, and angels, but if you move quickly enough, I'd love to speak to you, and my details will be shared. So that's all. Thanks.
Great. Thanks, Lex. That was great. I think very relevant with all the sustainability hype at the moment and COP26, as you mentioned.
Yes.
So for anyone interested in speaking to Lex, I'm just going to drop in a link to our form into the chat here. And if you'd like to fill it out, as I mentioned, myself, Tom, or Bobby will make the introductions afterwards. So you should be able to see that there. Thanks again, Lex. I was going to say nicely inside the time, but very slightly over. So we now have another Alex from Net4 who's going to be up next. You good to go, Alex?
Yeah, I am. Can you see that?
Yeah, we can indeed.
Fantastic. So I'm Alex Taylor, CEO of Net4. We utilise 5G to make video cameras smarter. We've broken our market down into 8 key markets. This presentation covers the smart city opportunity. Again, if you expand your mind to all the different 8 opportunities have different routes to market. So a few figures first of all, there's 770 million cameras installed worldwide. That figure is probably about 18 months old now, so that's growing rapidly. Only 5% of video footage is seen by a human, and less than 1% is actually monitored in real time, which means 99% of video footage is used either historically or not at all. So we see that as a big missed opportunity. As I said, this is about smart cities, local authorities, the challenges they have in rolling out technology and IoT, Internet of Things projects is huge. And giving the local authorities the ability to deliver these projects has been historically very, very difficult. So our solution, we use new and existing video cameras. We do video analysis inside the 5G network and then take business outcomes and the analytics of the information into the businesses outside of the 5G network. So a little bit deeper on this. You'll see the customer side from the cameras, so new cameras, existing infrastructure cameras. I'll go through some numbers of how many cameras are in the UK at the moment. You can then bring all of the video streams into the 5G network, so completely wireless, deployed across the UK and worldwide. And we then do the analysis of things like people, vehicle, public health and safety, optimized operations, and we allow those to be used for business insights, real-time analytics, and alerts and automation. So things like counting people into areas, alerting when emergencies are happening, those sorts of things. So what are the benefits of our solution? We use legacy equipment we allow local authorities to reuse existing assets for new solutions and technology. It's a secure environment. It's rapidly deployed because we're using existing infrastructure. We just add into that, and we reduce the deployment cost of analytics technology. It's a common data feed, common infrastructure, which allows local authorities to use this in multiple times. So they may use the same data in different ways for different departments. If you can imagine, the police may want the data for one thing, traffic enforcement for others, and then maybe where they're looking to deploy public services, they'll want the data separately. So we allow them to break that data down, maybe even make it available to the local population as well. So what is the market opportunity? As I've said already, it's 770 million cameras worldwide. 5.2 million of those are in the UK. And some of the local authorities, some of which we're talking to already, there's about 2 million cameras in operation in the UK as of November 2020. So again, that's the latest stats we could see. Key milestones we've achieved. We are ready for 5G, so we're fully built in. We did a Wira Smart Cities project, hence why I've focused on smart cities here. We've spoken to a number of local authorities. We've proven our solution. We've even had it, as you'll see, the middle one, we've had it running with Vodafone already. That's a live 5G pilot on live infrastructure in the UK. We also focus on private 5G. It's a very interesting area. If anyone wants to discuss that, I'd be happy to follow up after this program. And then the two big things for us that happened in the last 6 months, we are live with Amazon on AWS and their Catalyst program. So you can now take our solution on AWS infrastructure across the world with 5G. And the end of this month, we will be at Mobile World Congress, which is one of Europe's biggest telecoms conferences, on the Amazon stand, presenting our solution alongside Amazon. Real recognition of the quality of our solution. And they are taking us to a number of their network partners worldwide. So on to some numbers and what we're looking for. So this is the basis of our forecast. So how many network partners we're looking for our route to market, how many cameras per network per year, and then the total new cameras. So if you go back to the previous slide, you'll see that we're only looking for 49,000 cameras after 4 years. And there's over 2 million cameras just in the local authority space. So it's a very small part of the market we're looking to achieve our revenue forecast. And the forecast here at the end of 2025, just under £30 million recurring revenue at December 2025. So very, very good, strong growth. And our investment, interestingly, I know Tim mentioned about the use of funds. We've highlighted here a rough split, but as he said, that's not necessarily a driver for your decision. We're raising £1 million. We've already received 25% of that, and that's at 6 million valuation. Now, my last slide. So some idea of the exits. We spoke to Cavell, who are a technology consultancy, and they are seeing SaaS businesses being valued at 12 to 14 times annual revenues. And the big stat that I found very, very interesting was over the last 11 years, Facebook, Apple, Microsoft, Google, and Amazon are buying an AI startup every 48 days. So they're consistently buying businesses like Net4 to bring into their portfolio. So it shows they're not building this technology, they are taking it from existing businesses. And that's the end of my presentation. So thank you for your time.
Thanks very much, Alex. That was very interesting, a market I would never have known about before. So nice to see it's such a big space. I'm just going to drop in the form again to keep it up fresh at the top of the chat for everyone. So if anyone would like to talk to Alex, just fill that out again. So I nearly had to get the buzzer out there again, but if everyone could try and keep under the 5 minutes, that would be great. So next up we have Alda from Frankly. So a nice change of sector again here to a bit more of a I won't give it away. I'll let Alda kick off. You good to go? I think you might be on mute, Alda.
Super. You see that fine slides are there? Super, great. Okay, lovely to be here. Thank you so much. Very interesting presentations there before. So like you, Kerry, learned a lot. Okay, so I'm delighted to be able to talk about Frankly. Our vision is to be the go-to platform that drives wonderful, high-performing cultures everywhere and for everyone. And our mission to do that is to be the go-to people-centric performance management and engagement platform for startups and scale-ups everywhere. So we have a very strong team. Our co-founder and CEO, for starting with Noel, has some very strong leadership and commercial experience scaling teams of 100+ people in Australia and in New Zealand, and had accountability for multi-million-dollar transformation projects. And my other co-founder, Ronan, was a former startup founder and also an experienced VP at Bank of America, where he led transformational team of 400+ with accountability for a €5 billion $5 billion portfolio. And then there's me. I'm the former CEO of Morgan McKinley, and that was a 1,000+ team of people, global team on a growth and transformational agenda. Before that, I ran my own business for 10 years, and before that, had a brand and strategy career in Diageo and Coca-Cola. So we think this team are extremely focused on one of the greatest challenges and problems that is facing the world of work today, which is that the existing approaches are simply not fit for purpose. There is a need for a much better way for ambitious growth companies to drive their performance, and they're massively investing in tools to help them do that. That the existing issues are really not fit for purpose at any level. So let's meet Frankly. Frankly is a continuous performance management platform equipping startups and scale-ups to build their high-performing teams. And the dynamic world that these companies live in require an agile, continuous approach to performance so that they can meet their ambitious goals. So with Frankly, it's a very, very high number of features. You can see them there down the bottom. But with Frankly, it means that everyone feels really connected to the strategy. Managers are much more supported to deliver. Engagement levels soar, productivity soars, attrition declines, all of the metrics that these fast-growing companies need to find. And for us, we put simplification to the fore. It's absolutely critical that the people on our platform find it super simple to use. They also get access to really strong evidence-based frameworks, which give them a huge amount of knowledge and support on how to lead and how to manage in this new world of work. And finally, like our customers, they're extremely outcome focused. People are focusing much more on the deliverables, on productivity, on outcomes, and less on time and inputs these days. And Frankly is built absolutely to meet that need. So the market is absolutely booming. The growth rates in the talent management software markets are extremely high. You can see them down the bottom there, estimated to be a 5.6 billion market. And that's the market that we play, in particular focus on the UK, on Ireland, Northeast in the States, and Canada, where we're seeing some good demand coming through at the moment. Our competitors have been highly invested in and are spending a lot of this money investing in education of the world in how performance can be done much, much better. And there's some very interesting acquisitions that have taken place too. So these competitors, as I've said, have spent a lot in educating the market. And in fact, we're finding that we're absolutely getting the benefit of that. And our lifetime value to the cost of acquisition is right on the mark at 3, which is a really strong indication of the market absolutely adopting this new way of working. So our target market, we've clarified very, very clearly into these tech startups that are 50 to 2,000 people. They're in scale up, they're invested, they're highly dynamic. They've got distributed teams. They're really focused on empowerment, and they're hiring highly skilled people who really need to be fully engaged with the organization. So It's all about the employee experience for us, and we obsess absolutely in the UX. And we run a SaaS model, which makes us highly accessible for people to access the product, but we also grow as they grow. These are our current revenues, and we're extremely strong, looking at a very strong pipeline, and we're extremely pleased to see that our revenues already this year have exceeded 2021's revenues. So we're set for an extremely strong year. And we have a clearly outlined, sorry, move past that. We have a clearly outlined roadmap in terms of product development, geographies develops, and funding. So with that, thank you very much. And I will hand back to you, Kerry.
Thanks, Alda. That was very impressive. Thought we might get a little sneak peek into the demo there.
Yeah, I was conscious of time. I didn't want to run over too much for you. It's just 40 seconds, but it's available in the deck if anybody wants it afterwards.
Yeah, and if anyone wants to speak to Alda and get a demo in person, obviously use the link again, which I will drop in here again. But yeah, Alda, definitely think it's the employees market at the moment. So I think businesses are investing in retention of their staff. So definitely very relevant, and congrats on your progress so far.
Thank you.
So next up we have John from Gazelle. John, I don't know if you are, oh, you have it as, your name is Tom, I'll just rename you there. Okay, you should be good to go now.
Great, can everyone see?
Yeah.
Good stuff. So my name is John Halpin. I'm a co-founder of Gazelle. Gazelle is a residential property transaction platform. So we're a B2B to C business. So we license our platform to estate agents for free, and then they use it with their buyers and sellers to help them improve the process of buying and selling a home, making it more simple, making it safe, and making it more secure. And so the problem in the UK is that 30% of property transactions fall through. So when a buyer and seller agree to sell a house, there's nothing certain until 3 months has gone past. At any time in the intervening period, the buyer can pull out, the seller can sell the property to another buyer at a higher price, and there's no security whatsoever. So the average wasted cost to a buyer and seller in that scenario is £2,727. And the UK ranks 41st in the world for ease of buying a property, according to the World Bank. That's one behind the Polynesian island of Palau. So not an incredible performance for a Western nation. So the Gazelle solution is twofold. First, we try to make things more transparent. When an estate agent gets a seller, they provide them with a link into the Gazelle platform. There, the seller gets to create a buyer information pack where they can fill out all the details required for the lawyers, for the agent. We're licensed directly by the Law Society and various other industry bodies, and we've amalgamated and digitized all the information that a seller needs to provide onto the platform. And this gives the advantage that it can be easily shared with a buyer. So any prospective buyer that comes along can log in and take a look at the property before they spend weeks, if not months, trying to buy it and incur a lot of legal fees and surveyor fees and all the rest of it. So by doing this, we see that a more informed buyer is much less likely to pull out at a later stage, and also it expedites the process because the forms created on our platform are able to be used by the various other parties in the ecosystem, so there's no duplication. The second part of our solution is the Gazelle reservation agreement and Gazelle guarantee. Both parties, the buyer and seller, the agent has them enter into the Gazelle reservation agreement that says that they won't pull out for no good reason. They don't have to buy a deposit. Instead of putting down a costly deposit, they purchase a Gazelle guarantee. So if they want a £2,000 guarantee, they pay £250 each. If a party pulls out of the transaction for no good reason, we pay the guarantee to the injured party and we recover against the party that breached the agreement. This risk doesn't sit in our balance sheet. We've reinsured this at Lloyd's of London. By doing this, in the last 6 months, we've listed 1,700 properties. We've secured over 600 properties using the Gazelle reservation agreement, and we've reduced the fall through rate by 70%, which has a dramatic effect for buyers and sellers, the sales process for the agents, and it means they lose less commission and waste less costs. How we make our money is we charge the buyer and seller directly. So for a £2,000 guarantee, they pay £250 both sides. For a £10,000 guarantee, they'd pay £750 both sides. We have done £50,000, £100,000 guarantees on mega mansions. We have 275 branches signed up using the system so far. It's been well received by the market with numerous 5-star reviews. We first mover advantage. We don't have any competition, and the property ombudsman has put his weight behind what we're doing. We sit in all the government panels, the home moving, the home buying and selling group, and the technology working group, and the government have confirmed publicly that they're not looking to legislate here, that they're going to support private industry fixing the problem. Because we're B2B2C, we've a low cost of acquisition, and all our growth today has been done on less than 5k a month in marketing spend. And because it's an emotive issue, we tend to get a lot of coverage. There's a selection of the awards we've won, and then we've a number of high-profile collaborations. We're the only software company licensed directly by the Law Society, and PwC has recently chosen us to be part of a fintech platform that they're rolling out across a number of mortgage institutions. We believe there's 1 million transactions a year, and looking at comparables from the likes of Rightmove, Zoopla, Purple Bricks and other prop tech companies, we believe that on capturing 5% of the market, we could have an exit in the region of 315 million. Right now we're raising £1 million at a pre-money valuation of 10.7 million. We've £650,000 of that raised already, and we've 350 left to place.
Thanks, Sean. Sorry, I wasn't sure you were finished there. That was very good. Thank you. I think it's definitely an industry that, as you mentioned, is kind of lagging behind modern times. So nice to see you've some traction, and congrats on the progress so far. So again, if anyone wants to speak to John, I'll just drop in the form here. Please do fill it out and we can make this introduction. Now, last but not least, we have Joe from VO. Are you good to go, Joe?
Okay, yep, good to go.
Brilliant. Best of luck. I'll start the timer for a second.
Hi everyone, so I'm Joe, founder of VO, and we're out to solve sustainable shopping and the future of retail. We've been founded since January 19, and since that time we've won a number of awards, including most recently scoring top 5% of B Corps in December, which was great to see. So in the past 2 years, everyone knows the world has changed, but particularly with how we spend, the market for sustainable or conscious consumerism is growing year on year. It had a big growth from 2018. And obviously that was compounded as we went into the pandemic. People kind of were more considerate of how we spend, and we anticipate that actually 2021 will be higher again. So sustainable shopping is a youth growth sector, and this is one that VO is set to disrupt. So even as we return to normal, shopping will not be the same. By 2022, well, this year, 2 out of every 3 shopping decisions takes place on an online marketplace. So VO sits at the intersection of these 3 massive growth market indicators. Online global retail is valued at 6 trillion, and like I mentioned, the sustainable shopping sector is one of the world's fastest growing lifestyle trends. So we believe the owner of sustainable retail, as with all verticals, will be a winner takes all. Nowadays, with the kind of modern day conveniences, aggregation is absolutely critical to today's consumer needs. So with the likes of these other massively successful platforms that I've listed, Veo is set to take sustainability. So we can only think all the way back to Amazon and eBay in its early days on the left of that graph, and we can see the kind of verticals where successful companies have come in. It's all delivery, and you know, the list goes on. We've built the world's largest sustainable shopping platform. And those claims are defensible, as I'll go into briefly now. So first, we've had a number of differentiators, but the first would be our tech. We won an Innovant last year for the tech that we built, a kind of all greater sector, which means we can onboard brands within 24 hours, and that's what makes us one of the fastest growing and largest platforms. On the ESG impact, environmental, social, and governance side, we've got one of the most sort of rigorously built assessment tools whereby we approve all the products and the full life cycle of products and brands that we list on our platform. So with that, the last 12 months, we've seen our seller traction on the supply side grow 30% month on month. We're just coming around to pass our largest competitor that we can find with a pipeline that's 10x of that, with view to create almost 500,000 products within the next couple of years. So the team, myself, I came from a background at government, Department for International Trade, and led a number of programs, including working with some of the largest platforms. With that, we kind of onboarded a fantastic board and investor team that includes Steve Corns, who led the IPO for AO.com, and James Moore comes from the head of global marketing. So James is pivotal in kind of our acquisition strategy of how to grow platforms like ours, and make sure that we can kind of create that stickiness, that density of community, and have that brand loyalty where shoppers define us or Veo as the go-to platform. So this round, we're raising a modest round of 500,000, but with a debt vehicle and revenue-based lending of another 500, so $1 million in total capital over the next 12 to 18 months, which gets us into a seed plus or Series A round next year. The use of funds is broadly, like I mentioned, a scalable acquisition channel which beds the stickiness of the consumer, our product expansion, and also rolling out a fulfillment 3PL operation for the warehouse, which consolidates all the orders that people will purchase on the platform. And just a summary, kind of it's, you know, the right thing, the smart thing, profitable thing to do. And just as we were talking about exits, we envisage to follow the trajectory of other similar platforms like Mano, DIY, or Back Market. They've both gone from 0 to 1 billion GMV inside 8 years, considerable exits and raises on the back of that. There's also the likes of Etsy have just acquired Depop for 1.6 billion, and also Not on the High Street has had a recent exit as well. So I think that's my time cap, but really pleased or happy to follow up with anyone following this. Thank you.
Thanks, Joe. Nicely inside the time. It was a little bit blurry for me, but sorry, just to let everyone know that I also ran over Simon. I skipped over, I'm very sorry. So we actually have Simon up, who's last now. And I'm just going to drop in the form again here for anyone who wants to speak to Joe. But yeah, apologies again, Simon, your turn. If you want to share your screen there.
No problem, Carrie.
Thanks.
Thanks very much for the invite, by the way, all the guys at Swoop and Tom.
Delighted to have you.
Much appreciated. Yeah, so I'm Simon Osman. I'm the CEO of Tested.me. I'm one of the founders as well. So a team of us came together probably just over 2 years ago now, and we spotted there was an opportunity to give people better control of their health information, their health credentials. So we very quickly started building a platform, a digital platform to enable people to connect with their health and also connect with healthcare providers, diagnostic companies, and really streamline that whole process of giving people access to health information. So what was the problem and how do we see it? So we thought the issue was extremely kind of antiquated at the time, and we could see that getting information, booking health information, getting tested and getting results for any particular ailments that you may have seemed a very slow and antiquated process. So we felt that there was going to be a way of driving a better, faster way of giving people information and enabling them to get better quicker. So our answer to the problem. So we very quickly put together a front-end application in both Apple and Android. And we began the process of partnering with labs and medical information companies to enable them to connect with the public. The big problem was historically people got tested and they went to these healthcare organizations, but the ability to get these certificates and health information directly into a mobile application that you could store safely as individuals wasn't really there. So we went through the process of combining that. We then saw that there was an opportunity to build a dashboard and a back-end product to enable people to have insights into the health status of events, workplaces, etc. So we then started building a sort of BI environment to give people the ability to proactively manage their health better. So ultimately, it was a fairly unique time to launch. The COVID aspects gave us a little bit of a tailwind to build a community quite quickly. And that was what most of the healthcare companies have been focusing on really for the last few years. But ultimately, we know that there's a much broader market there. In terms of proof of concept, we've been connecting with medical diagnostics. We've been connecting with lots of labs. And we've probably shared nearly 10, 20,000 certificates already year to date. And we also know there's an enormous marketplace in terms of private testing companies, clinics and pharma. In the UK alone, there's over 2,000 providers of testing information. Again, the other aspect to our marketplace that we see as a huge growth opportunity is the use of lateral flow testing. Not many people know that lateral flow testing can detect over 30 different viruses. So we see that lateral flow testing is going to be a huge marketplace going forward. And what's happened in the last few years is people have started to realize that actually they can diagnose themselves quicker, whether it be flu, whether they need to vitamin check, whether they thyroid issues, etc. So there's so much more we can now do as individuals to take control of our health status. Our team. So you've got myself sort of leading the charge as the CEO at the moment. My backstory is I've done 3 different startups, technology-driven startups in my career, all of which have had a successful exit. I'm working very closely with Katie Reed, who's my COO, who's had a previous career within Glaxo's, enormously organized and well-driven individual with a good marketing experience. On the medical side, we have Dr. Liam van Hoystein and also Ronald Bruce. Ronald Bruce was involved in the SARS vaccine and founded a large company called Galapagos that listed, and he's done 2 other businesses since in the same space. And Andy really came together at the beginning to kind of see this opportunity to give people back control of health information. How we go to market. So we go to market through partners that already have large customer bases and provide testing services already. But what they don't have is a digital platform to connect the customers with their testing services. So across Asia, we work with Biomark. Across Switzerland and the UK, we work with VitaCheck. And in Ireland, we work with Reassurance. And they are already putting together testing services in all of these different regions. So our roadmap. So right now, we're going to continue to expand into growing our partner network. But ultimately, we're going to be moving more into other things like antigen testing, etc., as things start to move into a more settled environment. Ultimately, we'll then move into other types of testing in terms of blood, saliva, urine testing, and enable people to get that information either via a lab or directly put it in themselves. In terms of our community, we've spent a lot of time getting the awareness going in terms of what we're providing across multiple events, across multiple workplaces as well. In terms of financials, our KPIs today are, we've uploaded, as I said, over 32,500 health credentials. We've got 7,100 active app users right now. We are, in terms of targeting our numbers, we're looking at doing 1.1 million in revenues this year, which following year we'll be looking at doing 4.5 million revenue, which will get us to a positive EBITDA of about 250,000. And then the following year, which is, if you like, our super growth year in 2024, we should look at 9 million revenue, which will generate at least 3 million EBITDA, which should give us a valuation of about 45 million. The current raise or the current plan is to get 1 million together at a 6 million valuation, of which we've got 250,000 already committed. So it's exciting times. We've only really started raising since sort of towards the back end of last year. So yeah, thank you very much for listening to me. I'm Simon Osman at Tested.me, and be very pleased to take any questions outside of this presentation.
Thanks, Simon. That was great. Definitely kept the high quality up. So I'm just going to drop the form in one last time, and I'd remind investors just to please fill it out, and we will make the introduction after the call. And just to remind any founders that are on this call, you're more than welcome to set up an account with Swoop and upload your pitch deck for our team to review, and we'll try to match you to relevant investors. And then from the investors' perspective, please feel free to get in touch if there's any other areas that you're interested in aside from this pitch deck. And obviously, more than happy to introduce you to any or all of the businesses that pitched today. So we're hoping to have the next pitch series within the next 6 to 8 weeks, so probably in April. So stay tuned for more information. Hopefully we'll see you all there. But yeah, that's it from us. All I want to say, a massive thanks to all the founders and to Tim for speaking at the start. And we'll let you all get back to your day. Thanks a million.
Thank you.
Thanks, Kerry.
Thanks, everyone. Cheers. Bye-bye.
Cheers.
Thank you.